All right, what's going on, everybody? Thanks for jumping on and being with me today. Getting back into the live stream situation where I'm here in my office as opposed to the live event that we did last month. I hope people were able to go back and rewatch that. And I just look forward to continuing to be somebody that answers questions and is available for my clients. And so, looking forward to the call. We may be a little few on numbers. It is the summer. Sometimes people are less concerned about their tax situations now. But for the faithful who want to continue to learn and are trying to do things now, I'm here for you. So, I want to make sure that you feel free to pop questions into the chat. I know there was a few questions that were emailed to me as well, and so I'm definitely going to go and take a look at some of those, and hopefully we have a really productive chat today, and that I can get you helped out. In the news, I'll just kind of go with a little current event. You maybe have saw this, but one thing that the government or the IRS had decided to do was to stop having IRS agents just go to people's houses. And so that was kind of a fun little current event that I thought maybe some of you guys would find a little interesting. Fortunately, I've never had any of my clients ever say the IRS came to my doorstep. So we might be doing something a little bit right here. But anyhow, I know there's a lot of fear out there when it comes to IRS and the power that they have. And anyhow, this was one of those things where they said, you know what, we can handle revenue collection from our offices, and if we want people to come and get in touch, we're just gonna have them come to our office with set appointments. So anyhow, if you're out there and you were wondering if you were ever going to get a knock on your door from your IRS agent, that's not going to happen anymore. So anyhow, just a little bit of current event stuff for you that I wanted to get through. All right, I know a few people in the room. Sabrina, thanks for being here. Robert, thanks for being here. Allie, I said hi to you in the chat. Welcome, everybody. Some of you guys are just called Zoom users, so I don't know who you are. But Ray, you're a very faithful attendee to this thing, and I appreciate everybody that is being here. And hopefully Prosperity Society is something that's giving you a little more access to information in a simple way. We're over 100 members in Prosperity Society now. My goal is to have calls like this where we have 100 people on it. And so if you have friends or people that you think would benefit from it, please share with us. So, all right, let's get into a question I got from a newer business owner. They wanted to know what the best tools that were out there for tracking LLC expenses and keeping track of everything. And for some of you guys who have listened to me for a long time, you'll kind of know that I'm a big proponent of keeping things organized, having a business bank account, and having a method that makes sense to you for tracking all of your expenses. If you don't have a method that makes sense to you and is something on the end that I will be able to understand, that you have a really big opportunity of missing tax deductions or miscoding tax deductions or forgetting about tax deductions. And so for a really small business, you might not go out and hire a bookkeeper. My favorite answer to how do I track my expenses in an efficient way is somebody who's in this stream. I would always say you need to hire somebody named Marie, and she will take care of all of that for you. But if you're not in a spot where you're ready to hire a bookkeeper and you're just kind of getting started, you want to track your expenses kind of on your own, people do it in various different ways. I have some people who have a Excel spreadsheet, and that's the way that I did my own stuff for a little while. But you may have an Excel spreadsheet with different columns with the different types of expenses they are, and that might be a way that you can track if you're a pretty small business. If you're a little more assertive and a little more technologically savvy, you might try to take on something like QuickBooks yourself. And so having a software is really, really awesome to be able to categorize everything. But it is a software, and there is a little bit of a learning curve to that software. And sometimes when you try to do it yourself, you can get a little bit backed up on that type of stuff, and maybe you're not reconciling your accounts correctly, or maybe you don't even know what a reconciliation is, and so then maybe there's some issues with some of that software type stuff. So what I always encourage people to do is just do something that's really effective for them. And what I'll say is, if you have a business bank account and you do everything through that business bank account and you keep all of your receipts, then there's always going to be a way for you to kind of go back and backtrack on everything, because obviously your bank statements are going to keep everything for you. So at a minimum, you have to have that. If you are just throwing receipts in a shoebox, and then depending on your accountant or you to put that stuff together come tax time, you're either going to get a really expensive bill, or you're going to get accountants that don't want to work with you. And so that is something that I would definitely discourage. But there's definitely software like, I talked about QuickBooks, where you can scan your receipts in and it'll link it up into your QuickBooks. There really is a lot of cool stuff out there that's like that. But it really just depends on your volume too, because, like if you're scanning in 100 receipts a day because you're high volume, that's something that can be really tough to do. Maybe you need an assistant to do that type of stuff. So anyhow, I don't know if that's helpful, but as far as some of those tips and tricks, I mean, if you've got a pretty organized, fashioned way of doing it, and I would say if you have a business that is making money, it's a good idea to offload that. It's a good idea to offload that, just because it's something that you may end up spending 10 hours a month doing, but if you got a bookkeeper who can do it for 2 hours a month and it costs you $150, like, that's probably worth it if you're making money. If you're barely scraping by, I get it. You're probably gonna do some different things where you wanna save some money on that side. But if you're doing it, some people do books because they want something that they can analyze, and they want to look at it, and they want to be able to see it on a monthly basis and see what kind of money they're making and that sort of thing. Some people do bookkeeping strictly so that when I go to do the taxes, I have something that's in order. And so, you got to know that as well, as far as like who you want to hire and that sort of thing. A tip that I would say on a bookkeeper is bookkeepers, you don't want to get hung up on what their billing rate is. Okay, I have bookkeepers who charge $100 an hour and they can get something done in an hour. I have bookkeepers who charge $30 an hour, but it takes them 4 hours to do it. And so, I don't ever want anybody to get hung up on what a bookkeeper charges per hour. We would want to know, what they are going to charge you for the project on a monthly basis. So those are a few tips that just jump into my head right off the top of my head. And, if you do have a bookkeeper who's keeping a balance sheet and income statement, they're reconciling your accounts, and they have a general ledger that goes along with it, come tax time, I'm a pretty happy guy. If you have a spreadsheet, I'm still a pretty happy guy. if you call me up and you say, hey, I really didn't do a good job of keeping track of all my stuff, you're probably going to have some issues with some of that type of stuff with a lot of accountants. So anyways, find something that works for you. What's going on, Colton? Welcome. What do I think of Expensify? Yeah, there's definitely some other stuff out there. I haven't personally used that one. But again, if you're trying something out and it's working for you and you have a system, usually as an end user on the accountant side, it's going to keep track of stuff for me, and I'm going to be able to pull what I need from it. So yeah, if you guys have stuff that you're using and you like, feel free to post it in the thread here. And, there might be some people out there who are going to appreciate that. All right, let's see. I got a couple, let's go real estate questions here. And again, feel free, if you guys got questions, post them into the thread here, and I will get to them. All right, what are the pros and cons and income tax benefits of owning a rental house as a short-term rental versus a long-term rental? Okay, so, if you're doing any reading on tax deductions and that sort of stuff right now, you probably have seen a really popular thing called the short-term rental loophole. And, the short-term rental thing through Airbnb and VRBO has become really big in the past several years. And it's a question that we answer quite a bit. As far as, why somebody would want to go short-term rental versus just a regular long-term rental is just to start is upside with revenue. You might be able to rent a small house out for $1,500 a month, but you may be able, if you treat it as a short-term rental, to rent it out for $150 a night or $100 a night, and maybe you could make $3,000 or $4,000 in that same month, depending on how many days you rent it out. So a lot of people have been trying their hand on the short-term rental type stuff, and it really does work. And some of the rules that the IRS kind of established with some of the short-term rental stuff really kind of opened up some of the floodgates when it came to tax deductions. Now, it's a little tricky, and there's some things that you would have to go through on it, but when a rental property has a average use of 7 days or less, and you're turning it over on a regular basis, if you are providing services to that place, it's kind of treated more like a hotel rather than a long-term rental. And so you've probably heard passive income versus non-passive income, and when you have passive income or losses, the only way that you can offset passive income or losses is by other passive activities. Well, in a long-term rental situation, sometimes we have passive losses that we can't take any advantage of until the property sells or we have income from it. So when you have the Airbnb designation, though, you can kind of move that out of the passive category, and it's something that you can offset your W-2 income with if you have losses, or other types of income, other types of ordinary business income and that sort of thing. Whereas with rental properties, long-term rental properties, you wouldn't be able to necessarily do that unless you were considered what's called a real estate professional. So, pros on this are going to be potential tax deductions against ordinary income, potential upside when it comes to your revenue making abilities, and probably downside is just kind of day-to-day management. I mean, a lot of people that get into a long-term rental, they can kind of set it and forget it. Maybe they're, collecting checks, and maybe they're calling a repairman once a month or something like that. But for the most part, they don't have to manage it on a day-to-day basis. But if you have Airbnbs, you may be on a daily basis scheduling cleaners. You may be, swapping out linens. It just depends. But, management on a day-to-day basis would be a con on something like that. But overall, definitely something that we are seeing a lot of. And that short-term rental loophole has been something that's really, really big because people are doing what's called cost segregations on those properties. And what the cost segregation does, just without getting too in depth with you right now, is a cost segregation accelerates the amount of depreciation that you can take up front. So there are people who will buy a short-term rental, do a cost segregation analysis on it, and then get a lot of depreciation expense that they can offset their active income from. And that's something that we work through a lot with people as far as a tax reduction strategy. So anyhow, very interesting question, and definitely something that we've been implementing quite a bit. All right, so I mentioned the cost segregation, and there's a question here that's kind of saying, if we have a short-term rental and we do the cost segregation and we take the accelerated depreciation, does it have to remain a short-term rental forever, or at some point can you convert it over to a long-term rental? I haven't seen anything that says that you can't switch between the two. So I would say for now, until I see otherwise, you can definitely switch between the two. You wouldn't have to go back and amend prior returns or anything like that. So I think you would be good on that. All right, I purchased my first short-term rental property last year and have spent a year fixing it, but it's still not out as a rental. Can I write off my expenses from 2022 for a business that isn't making revenue yet? There's no LLC started yet. This would just be a personal income tax thing. Really good question. So a really good kind of litmus test on whether you can take the deductions or not is going to be if the property is placed in service. Now, placed in service has different meanings to different people, but in this case, say a lot of money's been spent in 2022 with renovations and rehabs, you get the cutoff at December 31st, and then, maybe you start renting it in March of the next year. So, what happens to all those 2022 expenses? You're not just going to put on your tax return zero revenue and then have $25,000 worth of repairs and maintenance, for example, and then show a negative $25K. That's going to be a major red flag and something that you're not supposed to do. Now, placed in service, as a general rule, is going to be when did you start renting it out? So, maybe you started renting it in March of 2023. So all those costs that you had in 2022, what happens is they're capitalized, and later when you place it in service will be depreciated or expensed as they should have been in 2022. So they're called capitalized. Carrying charges maybe might be something that you've heard. Construction in progress is something that maybe we would see at times as far as what this stuff is called. But, placed in service isn't just the day that it was rented. There is some case law out there that will say, if you were trying really hard to get it rented and there was advertisements out and all that kind of stuff, and maybe you just did that remodeling in the month or two right before, so it's rent ready, it's good to go, it's just taking you 30 days or something like that to get it rented out, there would be some justification to call the placed in service date when you started renting it. But I've really only, went along with that if maybe there was a little 30 or 60 day window, just from a reasonableness standpoint. Just don't want to take a bunch of deductions until something really is placed in service. And so, really, really good question. that is definitely something that I end up getting quite a bit from people. All right, what type of business structure, LLC versus partnership, will allow me to pay my kids to work for my business? All right, so one thing that I want to let everybody know is that an LLC can be anything. You can have an LLC that is solely owned by you. It's a disregarded entity, and you will file it on your personal taxes. You can have an LLC that's taxed as a partnership, where maybe you're 50-50 with somebody else. You can have an LLC that is taxed as an S-Corp, and that is a different structure. You can also have an LLC that's considered a C-Corp. So an LLC can be taxed as anything. All right, so to answer this question specifically, well, I guess a question that I get a lot is, well, okay, you just named off 4 things. Which of those 4 should I end up being? And I'll always kind of just say it depends on what you're doing. Usually it depends on how much money you're making, who you're working with in the deal, and what your future plans are with that business entity. So usually if we answer those 3 questions, we can kind of try to figure out which of those 4 types of LLCs you would want to be. In this case, where you're wanting to be in a situation where you want to pay your kids a salary, you can pay your kids a salary out of any of those types of entities, actually. Now, the thing that I always want to tell everybody, though, with paying kids, and I've done video on Prosperity Society about this, is just that, a lot of people out there who kind of market paying your kids are going to say, hey, you could pay them up to $12,950 and they don't have to pay any tax on it. Well, that is true. They don't have to pay any tax on it, but you don't just get to pay your kids $12,950 for doing nothing. Like, they really have to be working within your business and doing things within your business that is going to allow them to be earning that money at a reasonable amount per hour. IRS doesn't want everybody just paying kids $12,000 for doing nothing. It's got to be something that's reasonable. And so if you have reasonable tasks, you can pay your kids a salary through payroll out of any of those LLC structures. All right, so that is a tax strategy that I love. I have 4 daughters. There will be some point where I pay my daughters to do work for the business. Now, they'll probably whine and cry about it the entire time, but if I want to save some money on taxes, I definitely know that that is going to be an arena where I would be able to do it. So I encourage you guys to listen to a couple of the videos that I've done on paying your kids in the platform that we have. Continue to shoot me stuff, but one thing that I'm going to talk to you a little bit about is we are going through right now, and we're starting to hit really hard on these upcoming deadlines. The upcoming deadlines that are right around the corner would be for 2022 tax prep for people who have filed extensions. We've got September 15th, which is our partnership and S-Corp deadline. And then we have October 15th, which is our personal extension deadline, along with the December corporation deadline. So a couple big deadlines. You're probably going to see the accounting world over the next probably 10 weeks get really slammed, get really stressed, all of that sort of stuff. But one of the things that we're doing is we're just asking everybody to get their stuff in by August 15th if you're a September deadline, or October 15th. We want it by September 15th if you're an October deadline. For us, I would say, we are a little ahead of where we were last year, so we're encouraged by that. And, some other things that I would have you kind of focused on right now is September 15th is third quarter estimated tax deadline. So that would be where you're making your third quarter payments for 2023 taxes. So if you have any questions about that or think you should be making a payment, because I have a September 15th deadline, my encouragement would be that we start chatting about that now instead of like September 13th, which we undoubtedly will have some people who do that. But just want to get some deadlines on your radar as far as how I'll be working the rest of the year. We'll hit that really hard for the next 10 weeks. I'm still going to do live streams and videos and all that kind of stuff. But after October 15th, from that period through the end of the year, that is where I want to do year-end planning with everybody. And that is kind of like that sweet spot to make sure that we really can, get a bunch of that planning done. And so anyhow, just want to kind of give you like what the rest of the year looks like as far as workflow goes and everything like that. If you've turned in stuff, we've likely been working on it already. If you've yet to turn in stuff, then make a plan over the next 2-3 weeks to start getting that stuff into us. But yeah, you'll see us start to hit that stuff pretty hard. But that's kind of the calendar for the remaining part of the year. All right, can you discuss a solar tax credit on both personal and business? So you've probably seen this, but solar tax credits have been something that have been a big rage over the past several years. A lot of people have been kind of transitioning to solar and making sure that they're being energy efficient with their house for cost savings and all that sort of stuff. It seems like every year or two, kind of the percentage of what the credit is can kind of change. It's bumped between like 26 and 30% typically. But let's say you go spend, I just talked to somebody the other day about this, but let's say you make $100,000 and your tax liability is $10,000, let's say $15,000. And I'm just, throwing numbers out there for you. But if you have a tax liability of $15,000 and the solar tax credit right now is 30%, if you end up going out and you say, okay, I'm going to get a $50,000 solar panels on my roof, and you make sure that it's all qualified and everything like that. Usually the companies are really good because the tax credit's a big selling point. 50,000 times 30% is going to give you $15,000 of tax credit. So that would offset your total tax liability and you'd pay zero for the year. Now, if you've done something like, hey, I have a tax liability of $2,000 and I went and put a $50,000 solar panels on my house, that same $15,000 credit will only allow you to take $2,000 because that's your tax liability, and then the remaining $13,000 would carry over into a future year. So what that's called is it's not a refundable credit. Refundable credits like child tax credits and things like that are going to be things that you get despite whether you have a tax liability or not. This is a non-refundable one and carries forward. So, sometimes you want to do a little planning on that because there'll be people who maybe do the $50K and then they're expecting to get that $15,000 because they want to like hurry up and pay off the $50,000. And then they end up being really surprised when they don't get that chunk of money back. So, more common with the personal returns in the situation that I'm talking about here. But, you may have, solar panels on a house. Maybe it's an energy efficient vehicle. There's several of those that are kicking out tax credits. But again, all of that stuff, you have to have a liability in order to have to pay that. Now, on the vehicle side, let me just give a little pointer on that. There are a lot of vehicles that are going to qualify for this credit, but there are income limitations now if you're making a lot of money, you may not qualify for the credit. So, make sure that we're looking into that kind of stuff before you just run out and buy some solar vehicles. Now, let's say for business purposes, there's definitely, like, if you have let's say that you bought a warehouse and you want to make that warehouse energy efficient, there is definitely going to be credits that are out there for that kind of stuff. What I do is I hire a specialist that's going to go through there and check out all that stuff. They're like called 179D. Is like the code section where like you get credit for energy efficient lighting and HVAC systems and all of that sort of stuff. So if you're doing like a warehouse and you want, or an office building or something like that, and you want to be energy efficient and look for those kinds of credits, depending on how much your spend was and all of that sort of stuff, we would look for specialists on that, which I have and will refer you to. But we would get kind of a third party in on that to kind of help us out to figure what that is. But again, all that credit type stuff would flow through to you personally, most likely, depending on your business type. But you would personally end up getting credit for that. So that's a really strong question and something I appreciate. So anyhow, let's see. Anybody else got anything else before we get going? I'm kind of just scrolling through here, make sure I didn't miss anything in the comments. Are you guys liking this stuff? I mean, I think with you guys, like, I feel like I get about 10 between 10 and 20, depending on the time of year. During tax, I get a lot of it. But, give me a little feedback on this. I mean, we want to make the platform, we want to tailor it for you guys. We want it to be something where you're like, hey, I want to go look at this. And, I think that there's probably a bell curve of what we have on this right now, where I think that, there are people who are part of the platform who are just like, you know what, I really like Ronnie and I just want to support what he's doing. And maybe don't get into the content quite a bit. But I'm looking at different stuff, like, you maybe noticed on the platform where we have some sections with a guy named Brian Brown. He's kind of coming in and going to do some videos on kind of managerial stuff in the business, or, maybe talk about specific problems that business owners have. And so we're going to kind of bolster the platform that way a little bit too. I've also kind of thought about kind of adding some investing type stuff just for, fun for people to just kind of hear about some different types of things that maybe they haven't really, been aware of in the past. I know as a CPA, I'm kind of lucky to get to hear about, a lot of the different things that people are doing. So, we're going to continue to bolster the platform, and I hope that that's something that ends up being good for people. But if you guys want me to do specific video content, if you have certain things that you want to know more about and you want to hear specific type things, I'm all ears on that kind of stuff and want to continue to just do a good job for you guys on that. So anyhow, really appreciate it. We want to continue to grow this thing. And so if you guys have referrals for me on people that this is needed for, then I will continue to reach out to those people and bring them in. But anyhow, thanks so much for the call today, and we will see you about a month from now on another one of these things. All right, everybody have a great day. Thanks so much.